Some people are pessimistic about 2013 fiscal cliff, Middle East tensions, but some people are optimistic, and I'm here with one of them, Brian Belsky. He is the Chief Strategist over at BMO Capital. Tell us why you're so positive about 2013.
Well, at the end of the day, we're fundamental investors, and we think a lot of investors have kind of forgotten about fundamentals because we're all focused on the fiscal cliff or this headline or that headline. We've been doing this 23 years now, and out of any other time in my career, I can't remember such a time where people were so focused on macro events, okay? And it's really caused, we think, U.S. benchmark portfolio managers to underperform 5 out of the last 7 years as this herd mentality continues to drive stock performance and direction of stocks. And we think they're really missing the forest through the trees. So here's what we think they're missing. We think U.S. equities as an asset are the most stable and consistent deliverer of fundamentals in the world, period.
And you have 3 sectors that you think are going to be the best performing of those. Let's go through them. The first that we have is the industrials. And you know, everyone's going to go, oh, weak economy, slow recovery, why industrials?
Well, a couple of reasons. Number one, most people when they think of industrials, they actually think about emerging markets and all the exciting machinery that have gone over there to rebuild the infrastructure, the infrastructure in industrials. Remember, industrials are the most eclectic sector in the U.S. market. There's a bunch of different parts. It's not just about machinery. There's conglomerates, railroads, freight companies that we think will help define a surprising recovery in the U.S. Also helped along by what many people talk about, including ourselves, as a U.S. manufacturing renaissance. As the stability of the fundamental structure of the U.S. as an asset will bring jobs back here and bring infrastructure back here as well.
And energy, that's your next one?
Well, energy we think is a great value proposition at this time. It's not a value trap because we think there's great earnings and dividend growth within energy. And we do think we're moving toward a longer term path of energy independence in America, and the energy stocks will benefit from that.
Then you also like technology, but within information technology, you particularly like the software and the peripherals over the semis.
They're cash cows, number one. Number two, they have been delivering fairly consistent earnings growth. It's not as volatile as the semiconductors are still, from an industry group basis, on a relative basis within technology, continue to be the most volatile industry. And so we want to buy stability and own stability, and the most stable earners within the technology sector are the peripherals and software companies.